Good morning, students. As in our earlier lecture, I have explained you two methods of calculating goodwill, that is average profit method and super profit method. Now, the last method is capitalization of goodwill. In this, you have again two parts. First one I am going to explain today, that is capitalization of average profit method. So, what is this? What is in this method? In this method, you have to calculate goodwill after deducting capital employed from the capitalized value of average profit. Capitalized value of average profit means average profit you will multiply it with 100 divided by rate of normal return. That will give you capitalized value of your average profit. From that capitalized value, you are going to calculate your goodwill. I'll explain further step by step. The very first step of the sum is you have to calculate your average normal profits. How you are going to calculate your average normal profit? As we have done earlier, normal profits of last years divided by number of years. Second step is to calculate capitalized value of business. This is different. The answer from first step, average profit, you will multiply it with 100 divided by normal rate of return. So you are going to get capitalized value of business. With this, next step you will do determines the value of net assets. How you are going to determine the value of net assets? Here you have to see there is a formula. All the assets excluding goodwill, non-trade investments and fictitious assets. As already explained you about this, you have to exclude goodwill from all the assets. If it is mentioned in the question or assets, total assets, then goodwill is mentioned, then non-trade investment is mentioned or fictitious assets are mentioned. Then you have to deduct all of them from total assets. After that, outside liabilities. Outside liabilities are your creditors, okay, or any kind of loan from any third party. That are the examples of outside liabilities. If those are mentioned, you have to deduct them from assets, then you are going to get your net asset. Now the last step is step 2 minus step 3, means capitalized value of business, which you have calculated in step 2. This you have to deduct with this net assets. So step 2 minus step 3, you are going to get your goodwill. Is it clear? So now I'll again begin with the meaning. Now I think it will be more clear to you. So what is capitalization of goodwill? When goodwill is calculated by the capital employed. What is capital employed? In the fourth step, as I mentioned you, all the assets minus outside liabilities is your capital employed. So from capital employed, if you deduct capitalized value of average profit. Now do you get it? What is the capitalized value? You get the term capitalized. If the average profits are multiplied by 100 and divided by normal rate of return, this process is known as capitalizing. If any time I ask you to capitalize average profit or I'll ask you to capitalize super profit, you have to remember this method. That capitalization is done by multiplying it with 100 and dividing with normal rate, which is given in the question. So in other words, you have to reciprocate. Usually we are doing rate upon 100, but while capitalizing, 100 will be, yes, we have to reciprocate it. 100 will be up on top and normal return will be down. So this method is clear? Now I'll make it more clear with a sum. This is sum number 36 from your new book, beta. In this sum, information is given as average profit 5 lakh. From that average profit, they have mentioned that normal rate of return of business is 10%. It is clearly mentioned in the question. So capitalized average profit, how you are going to get? Average profit multiply 100 divided by normal rate of return. Average profit 5 lakh multiply 100 divided by 10. 10 is already given in the question. So answer your here capitalized average profit is 50 lakh. Then in your question, total assets were given 55 lakh and they said that outside liabilities are 14 lakh. From that I have calculated net asset, which is 55 lakh minus 14 lakh. It amounts to rupees 41 lakh. So now we have capitalized value of average profit and we have net assets. So goodwill is equal to capitalized value of business minus net asset. Your answer will be 9 lakh. Is it clear to all of you? You can have a look on this again. Average profit is given in your question. From that average profit, I have calculated capitalized average profit. Capitalized means 100 upon rate. So 5 lakh multiply 100 upon rate, you are going to get 50 lakh rupees. Net assets, as I already told you, total assets minus outside liabilities. So 55 lakh minus 14 lakh, it comes to 41 lakh. And now in this assets, if in total assets goodwill was mentioned there, then what we have done? You have subtracted it from 55 lakh. Okay. So you got your capitalized average profit, you got your net asset. So formula of goodwill is capitalized value of business minus net assets. That amounts to 5 lakh minus 41 lakh. So your goodwill is rupees 9 lakh. Now after watching this video, your homework will be to complete till sum number 37. Sum number 37. You have to complete till this sum. Thank you.